pretty good song, man. It's a good song. It's not too hot. It's not too cold. It's right there. Let's put the new one in there. Yeah, it'll hit them. That's hot. That's hot right there. Hey, welcome to the closing beat, everybody. Good afternoon, you beautiful people out there. How you doing? You having a good day? It's easy to say that when the market's up, right? You're like, oh, everybody's nice. Love everybody. Can we say that our sign? Yeah, we're at one day. Well, we got to get through the show, but we got a new sign back there. We've had days without audio issues. This might be one. Yeah, let's see what happens. If you don't know, we're financial advisors. We're good at numbers. We're good at planning. We're good at investments. Great at those, I would egotistically say. But we suck at how this all works. That's no joke. Rocket ship. Remember me saying the other day, what's the Fed going to do? 0.75% rate hike. Sometime I'll tell you on the next rate hike, I'll show you exactly how we know what they're going to do. And it's not the CBOE, the CME inflation, or what do they call it? The Fed tool monitor. It's the New York Times. There's actually a guy that knows, and there's a little secret in there that he gives away. But anyways, they're going to raise by 0.75, and that the focus was going to be more on what they say about raising rates in the future. We all know it. Everybody that's playing in the market knows 0.75. We got it, right? We knew that a week ago. Now we're looking to see, you guys are going to slow down? Like, tell me you're not doing these 0.75s continually through the rest of the year. And we got that today. Well, so I said the other day, you get a rocket ship for the stock market if they happen to talk about slowing things down. So we're going to cover all that and then some. And we've also decided that this is going to be a stand-up desk. We're going to play around a little bit because I hate sitting down, man. I like to pace and talk. Wine and Wealth tomorrow. Hope you're ready. If you're a client of ours, our summertime season, we typically go with a little bit more broader topics because there's not a lot of people around. You guys are out there spending your money on vacations. So tomorrow we're going to talk about what? Zero? What happened? No. No, it's forever going to be at zero, bud. What's the problem, man? Let's go over here. Y'all see it? Oh, we got to put the charts page out. We didn't do that one. Oh, man. I tell you what. Can I try a little something? Y'all going to hang with me for a second? No? The box is closed. Okay. How's it sound there? We good? Oh, man. That's horrible. We were all excited to use the eraser and stuff. Anyways, Wine and Wealth, right? I'm going to come back over to the main page. The Wine and Wealth, sorry about the audio, man. What do I need to know about you? What does your financial advisor need to know about you? So you may not be working with us. That's cool. You know, we can still be friends. But if you're working with a financial advisor, what should you be telling them? They shouldn't just be putting you in a mutual fund and then hanging out. What should you be telling them as your life changes? I can't wait to talk about that tomorrow. Also, our free videos are up. Eric's talking real estate or investing in the stock market or both. I don't know. Have to check that out. The Fed was out today and they had a unanimous 0.75% rate hike. Meaning, so there are voting members of the Fed. There are non-voting members who hope to be voting members someday. And is it real bad? What if I go... Can I stay here? What if I go on this page? Oh, what's the problem, Bob? Oh, all right. Well, we're going to deal with this here for a second. So I wonder, you got the voting members, you got the, I can't change the bit rate either. Voting members, non-voting members, all the voting members decided to actually raise by 0.75%. 2.25 to 2.5 is their new target range there. It wasn't long ago that was actually neutral for them. They actually said, hey, our target range is going to have to go up. We understand that, but we don't have to race to get there. That's your key. We can slow rate hikes. So he didn't come out and say, we are going to slow the rate hikes. They don't do that. They don't speak that clearly. So they said, we're going to go ahead and we're going to raise our target rate and we're going to slowly get there. That's great news for the stock market. It gives us time to digest these higher rates. It gives time for growth stocks to adjust and digest the higher rates, right? And it means that their range can be flexible. We're okay with that. So as boring as that all sounds, that was really good there. I noticed a couple other things. Jerome Powell said the U.S. is probably not in a recession, and talked about the employment numbers and stuff. No, GDP, we don't talk about that employment numbers in there. So that was funny to kind of see there. Also, one lady said, She asked the question to Jerome Powell, what specifically caused you to raise 0.75% and not 0.5 or 1%? What was that specifically that made that decision for that? And he totally dodged the question. He said, well, I'll assume you're talking about the next rate hike, and so I'll tell you what form things we're looking at. It was like, no, we wanted to know, like, what set the tone, man? Didn't get it there. Anyways, today, let's just do it. Stock market here obviously had a good day, back above the 50-day moving average. We shared those stats with you before. The market made a lot of assumptions today. You can't just say that that was a strong return in light of what the Fed said. The market assumed all in one day that the GDP number coming out on Friday will show a very small recession, slight negative growth, okay, or it will not show anything, any pullback, so we wouldn't be in a recession anyways there. It's also assuming that inflation, the next number coming out, will show a peak, meaning it won't grow. It will show some kind of a downturn. Our annualized rate hopefully falls to, as far as possible, but you know what I'm saying. So people are betting on that peak, which means the Fed won't have to be aggressive, and maybe they were signaling that today. So there's a lot of little undercurrents going on there, which the market made the assumption today, and we're going to find out in just a couple of days if they were right. S&P, you can see what's going on there. This is obviously a good day, up 2% plus on the day. It is 4 Fed rate days in a row that the market has finished higher by over 1%, right? 4 up. So go back to the last one, the one before that, and so on. We had our first one at the beginning of the year. 25 basis points, stock market was up 2.2%. Then we got that 50 basis point move, stock market was up 3%. Then we got the last rate announcement, a 0.75, stock market was up 1%. What do we get today? This is number 4, 0.75%, and we're up 2.48% there. Not one of those days, you can go back and look, not one of those days actually had any meaningful follow through, right? So is this different? Is this time going to be different, or is this just going to be like the rest of them there? A fun way to say it, since it doesn't matter what screen I'm on here, a fun way to say it is the S&P is down 17%, give or take 0.5% on the year, right? If you would have invested only on Fed days this year, you'd be up 7%, but that's not fair to say that you would have done that. Nobody would have done that. So what if you would have skipped all Fed days and said, I'm nervous, right? And you said, I'm going to invest in every single day, but I'm going to get out on Fed day, and then I'll get right back in on the next day. I'm nervous about the Fed. I don't know what they're going to do. Yes, let's assume you did that this year. You'd be down 23%. You'd be losing more than the stock market. That's just a fun way of saying the Fed up days had no follow through at all, right? There was no benefit to you being in on that up day. It erased itself and then some. Let's hope that doesn't happen this time here. Going forward, after Fed days that gain more than 1%, the next day loses 0.3% on average. So that's normal. Typical pullback after a big day is normal. The next week loses 0.09% on average and is not positive very often, 50% of the time. And 1 month later, the market was down 0.54% after the Fed day made the market go up 1% or more. And it was only positive about half the time. So we're looking for a turn in the corner. I'm not trying to sound negative. I'm trying to say we're looking for something to change those historical stats there, right? This is the time. Let's do it. Why not any other time? Anyways, moving on here. NASDAQ did the best today. That's going to be your big guys out there. Risk on, big time. What do they call? What do they say on TV? The mega cap stocks, right? Your Microsoft and Alphabet and trillion-dollar names, and Apple, of course, in there as well. Those were the ones that lifted themselves today. Microsoft actually had earnings. We'll talk about that in a little bit. So did Alphabet, by the way. So that was already helpful. Then you got Then you got the Fed helping us out here with Amazon and Apple and Tesla and lots of other names out there. So that helped the NASDAQ. Bitcoin got itself a 9% bounce today. It doesn't really care. It seems to like the 20,000 number still. The Dow's up 421, just a big number to grab your attention. Gold, hey, a little bounce in gold there. That actually took up the GDX as well. I, for whatever reason, still had a small position in that. So Cool. Happy to see that. You got oil up 3.3% on the day, flirting with the 200-day. There's nothing to do. You're going to get your little bounce. It's a tradable bounce. You move on, take a little profit. They call it a scalp, right? A scalp would be, maybe like a week-long trade, a couple days. You have a very small profit target. However many days it takes to get there, you take the small profit target and you move on there. New highs and lows for the day. I want to point out Garmin. There was really no new highs or lows to look at. You can't even see it. Look at that. Garmin made new lows. It's down here, right? Even though the chart's kind of blocking it there. It was the only real new low on the day that was interesting. It was a total miss in earnings there. Aviation division, their wearable division, all of it horrible because of the strong dollar, right? Look at the UUP. The strong dollar has hurt companies that get more of their revenues outside of the U.S. than in the U.S. Remember, we did a whole thing on that to explain why that is. So they get it's easy to remember, 53% of their revenues and sales come from overseas. The strong dollar caused them to lose $53 million. Not a coincidence there. So very bad. Not a good one for them. That's why I focused on that. All right, stocks in the news. Come on, let's do it. Microsoft, you see the move today, trying to put in a low here. Do you think it's a low? Anybody want to make a guess if that's a low? They missed earnings by 1%, but it was due to the strong dollar. I had a little fun with that. So if you take that out, you basically have a company that's growing double digits year over year, so that's not bad there. CapEx, I saw, was an interesting one. A lot of people were commenting on $6.8 billion, but that's down. So I'm guessing that was also helpful for them. Some things from their earnings report from them specifically, quote, evolving macroeconomic conditions and other unforeseen items had an impact on financial results. But it didn't matter because if you take that out, we're still growing like crazy. It's that darn strong dollar there. Cloud business, where everybody likes to look at their revenue, was up 28%. They are the third largest publicly traded cloud company out there, I believe. And revenue overall for them was strong, up to $6.3 billion. It's a good sign for Amazon, right? Amazon reports tomorrow. So Amazon reports they are the largest publicly traded cloud company, by the way. So that's good news for them, or maybe a little insight into what's going on. Alphabet missed on revenue by 1%, which is, it's huge for them. Come on. It's a big company. Missing by 1%. We're not just throwing around small numbers here. Advertisements were actually up, unlike Snapchat and Twitter. So good for them there. Total headcount, which I thought would be a negative, was up 30,000. So no wonder they're slowing their hiring there. Up 30,000. They employ 174,000 people. Their headcount is up 20% year over year. So they could take a break. You know what I mean? They're like, we're good. This is fine. Texas Instruments kills it. If you own some Texas Instruments, you're happy, obviously, with the stock price today. You got to be happy with the way the company's performing there. They beat on earnings by more than 15%. The guidance was higher as well, 2 or 3%. I forget what it was. Very, very good for Texas Instruments. The demand for an increasing supply at the moment, that's a tailwind for them. That's very exciting for them. So I don't know what else to say there. Just great. You don't have to break it down. You don't have to be crazy. Visa had a nice beat as well. Just like American Express, the action, though, came from cross-border transactions. Do you remember me doing that? When we talked about American Express, we said, uh-oh, everybody's buying the luxury stuff over there because why? It's cheaper. Our dollar's expensive. It's cheaper over there for them to do it. That was the same for Visa. Oh, no. 40% of their beat was caused by that cross-border transactions there. So really cool for them, just good news. Total processed transactions globally were up 16% year over year. That's something that people like to look at there. I don't find it that interesting myself, so that's about as far as I go looking into their earnings. Oh, we'll go over here. Mondelez, come on. You know what Mondelez does, right? Oreo. That's the only snack that matters with them, in my opinion anyways. The beat was kind of similar to Chipotle. So what I'm doing is earnings are not really that exciting. For me to just rattle off stuff, you can go look it up. What does it matter? I'm trying to make references to things so that as I mention stuff, I teach you something. And that's just my mindset there. So think about Chipotle. Sales down a little bit. Costs were higher. Ooh, not looking too good. But they jacked up their prices, and I still went to the store and bought those Mega Stuff Oreos, right? I didn't notice the price. I didn't even look at the price. Consumers did that. So if your costs go up and your sales go down, but you're able to charge more, that's a beat. That helps you make some money there. They would call it input costs, the sugars and things that go into making their different candies and beautiful, beautiful Oreo cookies. All right, I'll get your questions loaded up here in just a second. Spirit and Frontier deal is over. Remember I said that on Frontier's site? It's still there. On Frontier's site, they said, oh, Frontier and Spirit are going to combine. We're doing this. Here's all the routes and everything. That's over. I think they jinxed it by doing that. I'm just kidding. And finally, a fun one for you here today while we let the questions load if you have any. In California, they had proposed a tax on Disneyland, but you were going to pay for it. So they had a gate tax was their proposal. Hey, buy a ticket to go to Disneyland. Just for the privilege of going through that gate, we're going to tax you 2%. It was going to be anywhere from $2.08 to $3.28, depending on the ticket that you buy. And they said that makes sense. We're going to raise anywhere from $55 million to $82 million from people just simply walking into Disneyland over in California. What? Thankfully, that got shot down. The proposal to put it on the ballot, that was shot down. But I don't think you've heard the end of that. It was also the Honda Arena. Is that one in Anaheim? I think that was it. You imagine that? That's like the Ticketmaster and stuff. You buy a ticket and they're like, it's a $5 delivery fee. And I didn't see anybody, right? It's right there. My ticket's there. I didn't get anything delivered. Come on, man. It's a tough one. You know what I mean? All right, Mr. Andrews, this is the same pattern we've seen before. There's a jump after the hike followed by a severe drop. Oh, you nailed it. That's why I shared those stats with you. I try to point that out. You know, dummy. You know what's going on. Qualcomm guided lower. Looks like we should buy a couple of puts on Apple. Okay. So what are we at? 146, 147? Decent pullback there. Remember, it was the first, it got ahead of itself. First semiconductor to break its downtrend. Officially, here. Break its downtrend, right? So when did we break the downtrend? Right there where all the excitement was, right? People aren't stupid. They look at their technical patterns and they all bought on that day. It was a week ahead of any other stock. So a little bit of a reset there. But you're right. Earnings, not amazing on the surface, at least what I'm looking at there. Sorry about the audio, man. Cody jinxed it with that thing back there. You know what I mean? You know what I mean? We're at one? We were at one, and then we talked about it, you know? God darn it. I don't know what to do. We're going to call in the big guns, man. Cody guarantees it'll be fixed tomorrow. For the whole show? Ford trading a few cents higher, which is a big deal for them. That's a $13 stock, almost up to $14 there. You're right. Yep. Oh, Mega Millions people. You bought 5 Mega Millions tickets. When you win the $1 billion, will you still be your advisor? We actually have a client that won a smaller lottery. It was a state lottery. Younger person, and they wanted to spend it all in one shot. And I was like, look, man, you don't have to invest it all, but let me just coach you through this because I can hear the excitement in your voice. He had bought 50 things in his head. It was so if you need a little guidance in that respect too, I'm happy to help you with that. But I hope you win. Right? I think you would probably be our biggest client at that point. You talk about a music studio, man. You build the missus a music studio like crazy, right? That's it. I like it. It's all the metrics. Paul's got it right. So there's fundamental analysis. This is what we're doing today. We're looking at earnings. We're looking at margin growth, all the things we talked about. And then the technical traders like to just look at opportunities, timing. So the way you say it, nobody's wrong, by the way, either way you want to go about it. They say that fundamentals tells you why you might want to buy the stock, right? Cool. You might want to buy it because you recognize growth, margin expansion, increasing sales, whatever it is that you're looking at. That tells you why you want to buy the stock. Technical analysis tells you when you may want to buy the stock. Nothing wrong with using both of them, right? Not one of them is any, holy grail. Yeah. Any expectations on GDP numbers? I personally think we'll find ourselves in a recession, a small recession. I think it is, I agree with some of what you see on TV that it's hard to say that this is some sort of calamity or, oh my gosh, this is the beginning of the end. I actually had clients sending me links. One in particular sent me a link of a video. This is going to be the biggest crash ever in history. And I'm like, okay. So I sent back one where somebody said this is the biggest buying opportunity ever in history. And I was like, that's it. Remember, there's a guy locally that has a radio show. Whatever you dream about, you bring about. And YouTube knows. Think of it that way. Whatever you dream about, you bring about. Meaning whatever you're searching for on YouTube, they want to show you. You can very quickly make it seem like the world hates guns. The world thinks this is going to end. There's, wars that are on the, horizon. My YouTube thinks I like airplanes. I see a lot of airplanes. I'm not complaining about that. And it thinks I like Angelina Jordan because my mother keeps staying in my login and she searches Angelina Jordan. She loves her. And so my wife is like, what's this? What's airplanes and this girl? I'm like, no. That's her. No, I don't know who that is. I'm not going down like this. All right, we're off topic. That means it's time to go. Short one today, right? There's really one big event. Tomorrow there will be another big event with earnings. We're going to be focused on those, Amazon and others. Who do we have, by the way? Amazon is in there, Intel, and Apple will be the big focus after the close there. MasterCard to follow up with Visa here today, Comcast, and we're going to just say Budweiser. We're not going to use their actual name there, huh? How about that? All right. I'm going to get out of here before I get myself in trouble. Thank you so much for watching. Really appreciate it. I hope you learned something. Sometimes topics from one day do apply to others, and there's a great example there. Helps you keep learning, so the next time we come around to this, you go, I got it. I'm going to sound smart in front of my friends. I'm going to make the right decisions. I'm going to get my dough straight without doing silly stuff there. Best of luck to you. We'll see you tomorrow. Enjoy. Thank you again for watching, and adios.